Sorry, traders. Technical difficulties all the way around. Doc here from North America. Good morning, good afternoon, and good evening. Good morning, George. Good morning, Robin. I didn't realize I wasn't broadcasting. I'm talking away for the last 5.5 minutes, 6 minutes. I looked down and saw on my phone, and I saw Robin's name pop up, and it's like, wait a minute, what's wrong here? Oh, my goodness. Sorry about that, traders. Let's make sure the sound is still the way it's supposed to be. I thought I heard myself a few seconds ago. Yeah, yep, it is still working right. Okay, so sorry about that, traders. Where are we at this point? So, let's get over to, there's cable up there. Let's get the dollar index going. Hey, George, how you feeling today? I hear you. I hear you, Robin. I hear you. So, let's get the dollar index up there. It's been kind of firm the last 48 hours, I guess. Trading 2 days now, I guess. 2 days it's been firm. And, again, it's a combination of the interest rates. We're seeing that situation where we saw the interest rates trying to drive towards that, that 6% area. We've seen it get up as high as like 5.7, 5.8. Oh, no, Suzanne Summers died. How about that? And so basically we're really at this point now. I just saw her picture up on the screen. So basically, we are at this point where, as you can see right there on J4X, the dollar index is for the last couple of days fighting to be up. And let's go over to the other one there too. Let's go over to Chicago Quant on both of those. We'll open that up also at the same time. And let's see where we at. We'll put it up over here too. Let's open that up. And right there. I'll go like that. And you'll see it on that at the same time. Right there. Let's double click on that. There we are. And there's the dollar index too. Same situation. It's been green for a few days. And we have this situation now where it doesn't really want to let go, in the sense of, interest rates are firm, and there's good reason for it at this point. A lot of uncertainty. The economy itself, the numbers are coming out, and they're not going to be. I think how that we always see the first numbers look good, and then when you look inside at it, and so in the real estate market, we're looking at the way the property sales are going, and construction and all like that. It's really looking very weak, and we don't really see any signs that it's going to get much better than that. Hence, the options are, definitely a breath of fresh air. Now they've got the stock market. Let's just show you what the stock market is doing over here too. We'll switch that to there, and you can see. Let's make this one the whole screen. We're going to the highs of the day again on the stock market. It's pushing. It's and see the basically there's not much of what's the best way to describe it? There isn't. The economy is slowing. I think that's the best way to describe it. So when you see an increase, something where it looks like, oh well, maybe things are turning economically, they're not. So in other words, credit card debt is at a very high rate here in the States at the moment, and we're seeing slower and slower use of the credit cards. People are trying to stop spending. That's really what it comes down to. Is they're really working to stop spending because they don't have the money. So and then at the same time, part of that reason is the interest rates. The economy has gotten comfortable with 1 and 2 and 3% interest rates and 0% interest rates. And so they don't have they're not comfortable with 5 and 6 and 7%. Our mortgage rates now in the States are in the 8% area. That robs a lot of what we call free cash. So it's making it tougher and tougher and tougher. Basically that's really what it comes down to. All right. And so you can see there on the let's see, where's that? That's the stock market. You can see it's at the highs of the day. And then let's go to, let's fix it like that, and then just go over again to the dollar index itself right there. You can see the dollar index just down a little bit, but still in the daily buy. And that weekly did not let go, but you can see here the green or the slow algorithm is dipping down just like let's see, how do we do this? We turn it on like this, I guess that's what it is right there. There it is. And so you can see here, and let's look at it on a weekly basis on J4X. You can see right there the weekly's at 68.9, and the slow, or, the fast is at 68.9 on the weekly, and the slow is at 73. So it's dipping underneath the same way we are right there. We're seeing that pressure. And then when we jump back over to our new platform that we're beta testing at the moment, see the same thing. It's trying to move down. Matter of fact, the slow is also joining in on that. It's making a nice move down even more. So there's even more pressure. And so now, traders, remember, if you want to talk about any particular thing or ask about anything, just fire it out. We'll stop what we're talking about and take a look at it. We will go into the optionality of what's going on with the markets. We've become much more integrated, or having conversation now about the option market and what the possible volatility represents versus the actual price of the premium of the options themselves. I know that's a wordful. That's a whole mouthful of words. The price premium is what we buy and sell in options, and then you have different strike prices, but they all have premium that we trade. That's what we bid and offer on, is the premium itself. And so, and then there's a call, and then there's a put. The calls obviously have a premium, and the puts obviously have a premium, even if it's only 1 penny or $1,000. Either way, in other words, there's always a premium that you're bidding and offering on. All right, so from there we're going to go over to the euro, unless someone asks a question. See, right there. You can see there, same situation, 3 days down. You can see that the fast is at 21.7. The slow is at 44.6. So there's a lot of pressure on this euro. I would imagine over here on J4, on Chicago Quant, on the old platform, we'll probably see a much clearer picture. There's the Turkish lira. Right there. There it is. You can see it's trying to lift up a little bit after 2 days going down. And you can see the weekly is trying to turn. We're seeing the same thing here, where it's breaking our two manifolds, which are standard deviations of our mathematics. And you can see the fast and the slow are trying to turn up to get towards the zero line. And so, there is interest, obviously, to sell the dollar. And not unfortunately, but for those that are trying to play the dollar short, it's been very tough. The dollar is not exactly joining in. In other words, as much as it's overvalued, unfortunately, none of the pairs trades are strong enough to influence the situation. Now we watch for that, because we do. We've seen us go into sells, like in this case here, the euro. When we go over and look at our math again, right there. We went into the sell. Let's just tighten this up one more block. Where is that at? Right there it is. So we went into the weekly sell up here in the 110 area. That's why that pink line is right there on the weekly. That's the weekly sell. And then we were in a daily sell already for 3 days before that, and then it obviously broke down. That's why it's going down. It identifies when weakness is coming in. In this case here, there's another sell. And you can see it takes a couple days, and sure enough, it makes its money. Same thing here, and same thing here. Now this one was relatively shallow, only 1 day. It was fast in, what we call it, instant gratification, and it's backed off a little bit. I'm not really convinced that the currency pairs are going to be that weak against the dollar. I think we've seen most of the noise. That doesn't stop it from having one more slam, and that's why we trade, options and binaries and so forth. In other words, spreads. So you have a limited risk, and you don't get stopped out, and you have the opportunity to be in that position when it goes wrong against you, and then finally comes around and goes right for you. Whereas when you have when you're intraday trading, you don't have that problem as much, because you can put stops in. But when it comes to overnight action, you may be asleep, your stop knocks you out, and then 10 minutes later it's back you're back above where you want to be, and you're still asleep, and you didn't have an opportunity to get back into the position. So when you're trading 24 hours, if you're trading with the actual spot, you have to have a correct way of, or what I say, a more logical way of not getting stopped out and holding your position longer and utilizing options or marrying options with a hard delta. In other words, if you're long it, you own some puts or put spreads, and if you're short it, you might be buying calls or call spreads, to make you long on the other side of it. This way you don't get stopped out, and then you don't. Many a time I've heard a trader say, "Oh, geez, if I just was in that position one more day, I would have been a winner, but I got stopped out." And that's the reason I always try to remind people: don't put positions on that will upset your portfolio. Only be 3% invested, not 30% invested. If you want to be 30% invested, do that. What is that? If you want to be 30% invested, do that during the trading day, where you can change it and adjust it. But somebody must be doing something out on the road there. Okay. So yeah, that's why we talk about options, and we talk about using binaries and combinations. All right. From there, what we do is we constantly around here, traders, is go and look at our algorithm every day to give us an idea how and what direction to take in the markets. So from there, we go over to the cable, and there's the cable. Oop, let's see what we got here. I just saw a text come in. Let me just see who that is. And so there's the cable. The cable's a little bit up, just like everybody else. It's showing a little strength there, but again, it's not pressing on the marketplace as much as you would think. And so at this point, let's see, where is it at? We'll come up with something there. There it is. Just want to double check to make sure I'm not seeing anything from Europe or Giannis. I don't see Giannis up here today either. And so at this point, when we look at the cable, you can see it's just doing the same exact as the rest of the pairs trades. And now, from there, let's just put it up on J4X. I'm not J4. Yeah, let's put cable up on J4X right there. There it is right there. You see that daily is doing the same thing. Pressure down for 3 days, just like right here with the dots and so forth, below the zero line. And then we go over and we look at that same thing on our new platform. Let's see, where's that at? That'd be 6BF right there. And we put that up there, and you see the same thing. We have 3 days in the minus. Where's that mouse? Right there, 3 days in the minus with the pressure. And then, we see the weekly trying to lift. We see that it's made its low back in here, and that, made a new low here, but the algorithm did not. It's trying to lift up. So we are watching to this fact and thinking that the strength in the dollar is probably going to be a short-lived thing. I really don't have a lot of confidence that they're just going to, if nothing else, it's going to be a sideways action. George says, glad you're talking options and information more lately. Yeah, George, it makes a lot of sense. Was it Janos started that up? He said, you should talk options more. I said, I'd love to, but a lot of times it scares people. But maybe, if we talk about it slowly and steadily, constantly, and, talk about how you trade an option, like, it's the premium that you're buying and selling. That's what they call it, the premium. And then when you try to figure out which option you're trading, that's the strike price and the month or week that it expires. And so those combinations, talking about the physical mechanics of it all, makes it a lot easier for people to try to slow and steadily learn what options are. And then when we combine them with the algorithms, that's the next spot. I mean, using algorithms to decide how to put the put spreads on or call spreads, allows you to benefit more from it. In this case here, you can see the cable went into the sell. Well, you got the buy right there. Let's steal one of these buys. So it went into the buy right there. And then let's put a sell where it went into the sell 3 days ago, right there. And you can see it's just hanging out right where it finally went into the sell. Only went down a little bit on Friday, and here we are. You can see it's trying to turn up. Matter of fact, the fast, oh, you can't see that. Let me do this. And you can see right here, the fast is trying to get through the zero line as we speak. And you can see the slow is trying to lift up. And you can see, that sells in the wrong spot. It should be down below at this point because it's 3 days ago. And there it is right there. So, this was a good sale. It comes out, tells you to be short, and it's because we can take it. It's because why, traders? We're below the zero line on the weekly. So notice when the weekly and the daily join together, it opens the doorway for us to be able to, trade these things much more. And that's the most important thing of all, is having the algorithms or our technical analysis, be it our technical analysis or just anybody else's technical analysis. If you do practice and work on these things, then it opens the doorway for a lot better trading in the end. And that's really what it comes down to. And like right now, let me just show you again, the stock market's doing its best to lift up again. We're seeing some, inching up constantly, trying to make up from Friday's, I guess it was Friday's sell-off. Let's just go take a look at the daily on that. Yeah, Thursday and Friday, there was pressure because of the war. What was interesting is the war started on last weekend, and the markets lifted up more than they went down. And then Thursday and Friday, some of the economic news came out that was not very accommodating for a growing economy, and that pushed the markets down. And now we seem to be, we're in that October month where a lot of markets historically have bottomed. So what we have is we have a lot of money managers who still need to be in position, or they're out of position at the moment. In other words, they're not invested as much as they should be. So there's constant pressure for money to come into the market and participate. And that's what the real problem has been, is that money managers are underinvested, and so they're fighting to get into that long side again. And that's why we see the markets constantly, there's buyers. It seems like there's not explosive buyers, but buyers. And you can see here now, right there, basically you can see that let's do it like that. There you go. You can see that we're not taking out that low there. And our weekly is trying to turn. And so that says a lot. That's the S&P 500. You can see the fast is broken through the zero line today. Now, did it close there on Friday? I think it actually did. The fast actually closed in a weekly buy. So we're waiting for the slow to join in with that. But right now we know there's upside pressure. And if we get a daily buy, we know that there's going to be even more upside pressure. And so, and you can see here, it's already taken out this high right there. Now we have, days still to see if we get into that weekly buy. But right now we're seeing some real strong action in here, and if we can get the short term or the slow moving algorithm to get going, like it did back in here, see where it got through, and then the slow joined in with the fast, and they got above the manifold, we had weeks and weeks and weeks and weeks of buying. And that's what we're looking for right now, is to get that confirmation that we're seeing that type of potential to it. We know the potential's there. Now we're waiting for the actual fact to show us on our algorithm. When it does that, whereas here you can see we were at lows, and everybody was thinking, okay, markets are not doing this or that or the other thing, and it was just kind of plateauing. And then when our work starts to get going like that, you get strength, just like you see right here again, where you have the fast and the slow getting through the zero line, and the buyers start to come in. And same thing here. You get it again here. It's even more forceful. And so now we're at the point. Let's move that over again, right there. We're at that point where it tried to get through here, and you can see that force. It got into the buy right here, and it tried to, and then it sold off again, and then lifted up again, but did not take out the top. Now the question is, are we going to see a new high and try to challenge, say, this bottom in here on the S&P 500? I would think they'll find a way to get back up over the 20 or 30 area, and then we'll see what they do from there. And again, and let me just re-emphasize this one other time, or again, and that is that many decades and even centuries at this point, the markets have a habit of bottoming out in October, and here we are at October 16th. So in other words, when it gets into by the end of next week, people are going to be even more hungrier to being on the long side. Let's put it this way: they won't be happy being short. That's for sure. All right. From there, we'll jump over to. Let's take a look at the Swiss. There it is, right there. And there's, you can see it here. It's trying to lift up through the zero line. This is the Swiss. It's kind of bouncing around. We are flirting with, you can see the fast broke last Friday. It's now into the sell. We've got the slow breaking the manifold, working its way down to doing the opposite of what it's, of it going up, just like when it broke over here and you had the constant steady climb. Now we have it trying to tell you that it wants to go down. All right, now from there, let's see. Let's take a look at the yen. The yen, did pretty much what we're expecting, and that is play with that 50 area. And I did see this morning Tokyo had gotten the Nikkei almost got up to 32,000. That's pretty good. It's only 7,000 now away from all-time highs, which is pretty provocative when you think that the last time it was at the all-time highs was 1993, I believe it is. So it really puts a lot of pressure on the idea that Japan has been in a stagflation setting for 3 decades, not 3 years or 3 months. We're talking 30 years, 3 decades. And you can see the yen here. Let's put it up over on J4X. There it is right there, dollar yen. And you see it's just bouncing around. You can see the fast is at 85.3. The slow is at 79.5. So the pressure is still on it in J4X. Over here on Chicago Quant, same situation. We're above the zero line right there. And the weekly is still above the zero line as much as it's flirting and trying to pressure itself. And then when we go over to 6J, we'll see the opposite action. I mean, it's moving the same way. It's just that in the States, when we use the futures contract, it's not what I would call Eurocentric. It's not. It looks different because of that way they trade it right there. Here we go, and you'll see it in a few seconds. So it's the reverse relationship. You can see here, instead of the weekly being above trying to get down, it's because it does the inverse. And so you can see right here, we're trading in the, let's emphasize that. I'm not sure why it's showing that, but it's, where's it at? It's at point, something don't make any sense, but it's basically, the algorithm is right. And so it's still in the minus as we are over here in the plus, working the same way. And that's why we like, we're going to get data feed from Dukascopy, and then we'll have some really good charts with the currency pairs. I'm looking forward to that. What else can we say about the yen? I guess that's about it with the yen. So then we'll go over and we'll take a peek at the Turkish lira, which is, it's like almost, it's literally like a bench test / experiment when we look at the Turkish lira, because it does things that we don't expect, in the sense that the poor currency's gone from 1 to 30, which is extraordinary in its own right. So you see that there, it's trying to lift up, and it is flirting with. Let's see if we can widen this for you a little bit so you can see that. There we are. I'll move it it down a little bit, like so. There we are. You see, the last 2 days it's been in a sell, and they made a low today, and now they're trying to turn up. And you see, there's a green dot there, and there's no red dot, and it's just above the zero line by that little number there, 0.02. So the pressure's on it. It's been in the weekly buy since the 28.5 area, 29, something like that, 28.5 area, and it's trying to pressure its way up more and more. A currency that's going from 1 to 30 is really hard to relate to, I guess you could say, in some ways. We see the cable go from like 1.27 or 1.3 down to 1.21. Very tight. Same thing with the euro. We see it jumping around from 127 down to 120, or let's just take a quick look again at the euro. I'm sorry, 110. That's what it was. 110 down to 104 and change. You're not talking about from 1 to 3 or 1 to 9. Where we've seen the Turkish lira go from 1 to 30. So it's very hard to, appreciate, I guess you could say, the pain that the population is taking from it. Let's go from there. We go over to the brick, the number one brick in the world. And that is the South African rand. And with it pushing down, we've been seeing upwardly momentum in the metals complex. So let's go take a look at gold. And let's put the rand up on J4X there. Right there. You see that pressure's been on for 6 days now, is it? Yep, 6 days. And because of that pressure, we expect to see, when we look at gold, right here, that we expect to see gold kind of pressing on the upside for about 6 days. And sure enough, it has. There's 2, there's 4, and this is 6. Now, there was a big pop on Friday, and you can see we've been in daily buy for 6 days, and you can see the weekly is having its issues. It got through, the fast got through the zero line with no problem today. And it's through the manifold, but the slow is not joining in. And so money is really having a problem joining in with this move out of it all. From there, and let me save that at the same time, like so. We'll go over to the silver contract, and we'll see what that looks like there. There it is right there. And as you can see, it's been in a daily sell since right here. Weekly sell since right here. And it's been in a daily buy. Yesterday or Friday, it went into the daily buy. And it's showing a little weakness, but it's still holding in that buy. And overall, it's went into the buy on here. I guess move that over. So it's been in a buy something like 5 out of the last 6 days. And so that pressure on silver is the same as on gold. And that is, as we see the South African rand on the left side over here going down, we find on the right side the gold and the silver finding ways to go up in value. All right. Now from there, we can take a look at copper, which is very curious. Also, that's what we always think is the Chinese influence itself, because copper is very big in China, and it's used like gold, and so it's used like a currency. And so you see here, copper's been in the sell for like 4 days. It's trying to lift today, and it's moving the opposite direction of the way gold and silver are. And then from there, the last one we look at is platinum. Right there. And there's the platinum, and it was interesting. Thursday it got knocked down. Friday it got into the buy, and here it is, just unched for the day and pushing back down again. And it's still in that weekly sell, just like silver and gold have been. And also copper. Copper's been in that weekly sell also for the last, is it 3 weeks? Let's just take a look at it again. Right there. 4 weeks, going on a 4th week now in a sell. 5th week, I'm sorry. 1, 2, 3, 4. This is the 5th week in a sell when it comes to copper. Alrighty. Now from there, we slide over to we go and look at the energy complex, and so we switch from the South African Rand over to let's do this too. Let's put the Rand up on Chicago Quant for a moment, just to get a flavor of it all. There it is right there. And you can see, been in that sell like that, and the weekly last week it went into the weekly sell, and it's just kind of hanging out. It looks like a big plateau situation. You can see that the currency itself has been somewhat sideways now for over a year. Let's just push it even further back since this what we have written there. It says $500,000 cash. That's what started all this. We think that overall the South African Rand is overpriced, but unfortunately they have not been able to bounce. They asked for the president to resign about, what's it now? It's like the beginning of the year, but no one seemed to have paid attention to it, and he's still there. So you see a premium, as we would call it, a haircut on the trading floor in the South African Rand. All right, from there we'll go over to the energy sector, and we'll take a look at Canadian. There's CAD. And you can see a little weakness there this morning. It's been pressing up. Fastest trading at 57, and the slows at 44. So the pressure is still on for the Canadian to try to lose against the dollar. Now let's get that up right there. You see that same situation. And it's not, and we're in a buy too. So we've been in a buy from here. When it went into the buy here, it has not been profitable. Not even. Let's just do this. Remove that and put it back where it belongs. But there's that 0.15 of an error with our math. So out of 10, 8.5 times more likely you're going to be right. And why did I keep on putting it up top there? I guess try this one more time. Put it right where it belongs, right there. So we're seeing that pressure on it, and at the same time we're in a weekly buy. So it makes it very hard, especially to sell here. We couldn't take it because we're in that weekly buy. So overall, as you tighten up the Canadian on here, you realize we went into the weekly buy at 132, and the daily buys had been very successful. Went into a sell there, so we could always grab that one and put it like that. And then let's take this one and went right into the buy again right there. And stayed in a buy for almost the whole month. Finally went into a sell right here. Right there. And then the following day went right back into the buy with us in a weekly buy, which gave us some good instant gratification again. But this one here has been a very poor move. You see, let's put that sell in there again right here. Into the sell here, but we were in a buy, so you couldn't take that, and you only could take the buy, which was okay. Made money again, and then it also at the same time made money on this one. But this one's having some issues at the moment. We'll see if they can straighten themselves out, being in a weekly buy and a daily buy, and not going up in value. All right, now from there, we march our way over to let's see. That finishes the CAD, but we look at the energies themselves now. So we'll leave CAD up on J4X and take a look at, there's right there. Right there, there's this front month, which we're going to be switching in about 2 days. And it's in a buy, as CAD is trying to get into the sell, but it's not there. So it's kind of breaking away a little bit, and you can see here over the last 3 weeks, oil was dropping down, and CAD was moving up was losing against the dollar. That's the normal adventure of it. That's that normal rhythm. Then over here, let's put Brent up on, I think that's BZF, isn't it? Yeah. And so here is Brent on our new platform. You can see it's in the buy for a couple of days. And when you look at the weekly, it's been off and on. It went into a weekly sell, went into a weekly buy, back into the weekly sell. You can see over here on Chicago Quant, we are in weekly sells now, 2 full weeks going on a third week. And then when we go and look at it like that, right there, the November contract, see this is different. We have the weekly sell for going on a third week, just like we are over here. Whereas Brent itself, which is a little of a surprise, is not reflecting that. Brent is reflecting more of the weakness, and I'll put it up over here too. Let's put Brent up on the screen there. There's Brent. See trading at 90.93 right there, and it's been in a sell, just pressing down. And what else can we say about that? I guess that's the Brent, and then as we see West Texas over here on the right side. Oh, you can't see that. Let's do this again. There's Brent. I'm sorry, that's West Texas Intermediate right there. So as much as the world is in some form of calamity, we see that the contracts, and a good reason to trade the options, or at least talk about the options. In this case here, bull spreads would make sense to be, if we get into a weekly buy and a daily buy, you want to have bull spreads on in the options. This way you can try to trade the upside. And right now we've been in a weekly sell for 3 weeks, as you can see from here in the 90-ish area, and sure enough, it's been finding ways to go down in value. Especially right there, it went into the daily sell, and then it joined in right there on the weekly, and this was the big win out of it all. And here we are now in that weekly sell, and we get a weekly sell signal there. What's it back to like that, and this one right there, and it's just a one-day adventure right there. We get into the sell, it gaps up, and then goes down, makes new lows. So when using options, you can deal with those stops situation, because the options themselves are a stop, and that's what it comes down to. Is option spreads are limited risk, and you can set up for obviously you have, sometimes you can be unlimited gain, sometimes you can have a limited gain, but the idea is to not get stopped out and try to make some money. That's why we always say here, we are here to make money, not trade. And that's why we talk about the options and how to utilize them for times like this. Justin Mark, hey, how you doing? Nice to see you. Welcome. So you're welcome to ask any questions anytime. We're always just ready to go and have a conversation about options or the algorithms and directions of products. And if you want to look at a stock, or you want to look at a currency, or you want to look at a futures contract, let us know and we'll jump in and see. But welcome, Mark. Let's see. So from there, we go over to natural gas, which caught my eye. Natural gas has been selling down for the last few days. Still in that weekly buy since down in here, and the daily buy was an interesting move. It went from the 290s all the way up to 340, and now we're flirting. We went to the daily sell there. You see the pressure's been in the last couple of days, but we're still in that weekly buy. So the question mark is it going to start to see some buying again? We get into a daily buy with that weekly buy, and do we get another pop on the upside, or at least go challenge the highs of the last week, which wouldn't be that bad. You're talking about a move from 3.1 to basically 3.4, which is a really good gain, when you think about it. All right, so from natural gas, we take a look at the stock in Spain to get a flavor of what's going on in Europe. And right, let's see, where's it at? Right there. So it's trading at 26.64 offer. We have it over here on right there. Let's see, we'll find it in a second. Right there it is. So we can see here doing the same thing. We were popping up for the last couple of days, and then all of a sudden we're starting to play with the sell, and you can see it go into the sell right here. And this usually matches European natural gas price-wise. So that's a we're hoping for this product to go down, not up, because it makes natural gas cheaper for people in Europe, because we're seeing large prices, extremely aggressive prices. We were impressed to see natural gas in the United States actually make the turn that it did do, going from the 280-90 area up into the 340 area. That was somewhat of a surprise. We weren't expecting much out of it. And then we got into that weekly buy and that daily buy, and sure enough, it had a nice run at it. And again, we always mention that it's 8.5 out of 10 times accurate. So it's just like the pass line on the crap table at the casino. You keep on playing it right, and you'll get your money back, and then some. All right, now from the nat gas, we slide over to that finishes off our energies. Let's look at the bond market. Here's the 30-year bond. They're breaking down again this morning, as you can see. They popped them up on Friday. We're still in that weekly sell for a long time now. We went into that weekly sell up in the 127 area, 126 area, and we've traded as low as 111 and change, maybe even 110, 109 is that? 109. So we've gone from 126 to 109 in the futures and the bond contract. It's a lot of pressure there. And you can see here we've been, it was in and out a few times here and there. Went into the sell there. And then, I guess in this case here, it doesn't even show a buy. So it's showing that the weekly sell is back in here on this back month. We'll just put them right there. So we've been in a sell since basically the 129, 28 area on this one. Now remember, this is kind of dead, so there wasn't much activity. At that point, we were following the September contract at that point. June had just expired. And so here we are now looking at the December contract. And the interest rates, as we've said before here, they are moving on the upside. Interest rates are going up, and our economies in the world, ever since 2008 and quantitative easing, our interest rate proclivity, I guess you could call it, or our comfort level, has been to see lower interest rates, not higher. 0 interest rates, 1% interest rates, and last 3 years of Mr. Biden, we've seen interest rates move to a 40-year high, not 4-year high, 40, something like a 41-year high. So it's been a real surprise the way it has exploded under Mr. Biden. Again, we have the Secretary of Treasury and so forth coming out with some bold, ridiculous statements about inflation being transitory and all. That's been the problem. That's perfectly. Let's see. Mark says that's perfect community. Hope you all well. I guess it's hope well all. Good. Thank you very much. So yeah, we're looking at interest rates, and they have not done anything but find ways to go up, and that's because of the inflation. And for the first almost year and a half of Mr. Biden's administration, he ignored inflation. And Mr. Powell, the Fed chair, did the same thing. And Mrs. Yellen, the Secretary of Treasury, or for a lot of you out there, the financial minister, did the same thing. All three of them sang a song that, "Don't worry, this is going away." And it has not. We ran from 1.5 to almost 10, and now we're in the low 5s, high 4s in inflation, and it's slowing down, but our inflation is still increasing, which makes it really, really hard for a lot of people to buy houses and pay bills and buy food. It influences everything in our society. So the best we can say about all this is that interest rates, will probably stay in this area for a while until we get rid of this type of economic policy. once we change the economic policy, then we'll see lower interest rates and a healthier economy, and all the things that we're hoping for. Everybody wants to see. All right. From there, let's see what else we got going on. Let's take a look at the stock indice over here. We're going to look at it on our new platform. This is our beta test. So anybody interested in a beta test, you're welcome to contact us, and you can always try it for free for a while. You can see here it's trying to lift up today. We're in the minuses still. Same thing right here. Trying to lift up. Let's widen this out. You can see we've been in a sell since the 4,600 area, 45 and a half, something like that, 4,550 area, and it's done its best to find ways to go down. When it gets a sell signal, it breaks. Sell signal, break. Sell signal, small break. Let's see if they get into a buy. You can see the fast moving up, as we said in the beginning, and then when we go over and look at the intraday right here, you see that same situation going on, where it's telling us that it wants to go up in value. We've got the futures contract now at 4,382, and we're figuring that it probably gets up into the 4,400 area. Maybe it gets up to 4,420 or something like that. Let's see if it breaks out, because we have one comfort level, and that is we know that a lot of money wants to be invested, and it's not. It's sitting on the sidelines, and here we are at the end of a market where October markets are notorious to have problems on the downside, and you can see here. Can you see it here? Oh, you can't see it. Oh, you can't see that going on. Okay, so you can see here. Here is, what is that? That's the end of September right there, and there's your October lows right there. And matter of fact, it's October 5th or something like that, or 3rd, 4th, something like that. Let's see what it is. October 4th. So, it's an early October, basically. That's what's going on, which is, curious in its own right. All right. Well, traders, that's about it. We're getting ready now to open up the U.S. market, so we're going to get out of here. So we will see you all tomorrow, same time, same channel. And we have to have some type of title, too. What title should we use for today's market? I'm trying to think what we talked about. We talked about interest rates and how people are not prepared for the higher interest rates. So we can basically use that as a title today. And we could take a look at, we've looked at the options before, and the options are really not predicting big moves in interest rates at this point. They've kind of stalled out on that. So I think that will be our title today, and that is option premium in interest rates are stalled. All right, traders, this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, we will catch you all tomorrow at the same time, same channel, and have a safe and smart trading day. Ta-ta for now.